Yeah, Josh, I'll just let you start actually. So,
Okay, cool. Hi guys, hope you guys had a great weekend. So to start this off, I'm gonna do my best to explain the differences between mutual funds and ETFs. So I'll start with mutual funds. That's usually what most people comes up. Hello?
yeah,
Yes, okay. I
yeah,
was gonna start with mutual funds. And so to give an explanation of mutual fund, um, a mutual fund is usually like a company or like banks. They're very famous for mutual funds, and it pools the like investors' money to make multiple types of investments. So example is you go to the bank and they're gonna say you should get mutual funds, and they're gonna tell you that it's a good way to diversify your portfolio. And so when you purchase that, you're now buying into their their funds, and you're also you're buying into their stocks and their bonds, which they have, which is called a portfolio. And so the more clients they get, the better and the bigger they can grow their portfolio. And so the advantages with a mutual fund is that they provide a service for you. So instead of you really going out there, and if you're fairly new to the stock market, you're going to be looking to buy, you might become overwhelmed. Whereas with a mutual fund, you can say, I'm interested in, let's say, the aviation industry or so forth, and they can have mutual funds and bonds. I mean, they can have, sorry, stocks and bonds, which are within that industry, and they would sell you that mutual fund. And so when you purchase that mutual fund, it's basically giving you access to diversification, meaning instead of maybe just having the one, let's say Air Canada stock, it would have maybe Air Canada, um, Jetsco, and companies that maybe build uh, products for the airplanes and catering. They'd have all those companies in there. So let's say now one of those stocks go bad, but the other ones are performing well, then it lowers your risk. And to you, let's say your mutual fund maybe for that day might go down by $2. Whereas if you were just invested in the Air Canada, you could have lost $5 or $6. So it reduces the risk there. And another one of the reasons why people go for mutual funds is that it's uh, it's a professional management. So you have people looking out for your investments, and they're sort of doing all the work for you. And for you, it's more for ease of investing. So it lets people who are getting to investment a bit more comfortable with the mutual funds. So one of the downsides to a mutual fund is that you can't sell it throughout the day. Whereas with a ETF, you can hand it like a stock. You can buy an ETF, let's say at 10 o'clock, and maybe you say, you know what, I want to sell this and get something else. At 12 o'clock, you can do that. Whereas with the mutual fund, you can't sell it until the end of the day. So once they have a price, the management team, they will say, this is the price for the mutual fund. You have to buy it or sell it. You don't have the option, like when you're on the stock market, you can wait until it comes to the price you want and then buy or sell. So a mutual fund has a fixed price for that day, and you have to buy it or sell it at that price. So that's one of the downsides to a mutual fund. Now, moving on to a ETF.
And
Um,
I'm just on a conference call. Hold on. Can I have a question before you move on? How
yeah,
much of your portfolio, percentage-wise, would you say is in mutual funds and ETFs?
me personally, I don't have mutual funds or ETFs.
Okay.
I'm more like to do the work. I sort of get gratification of doing the research and really understand that company and making a purchase over having an ETF and mutual fund in a portion of that industry what I'm looking for. But to answer your question, it comes down to what's your strategy type. If you want exposure, and let's say you're trading on um, the Canadian market and the US market, usually the brokers here don't really give you access to the German market or the British market. Whereas with a mutual
Chinese
fund or
market too. Yeah.
ETF, you can have access to that through that company. So you sort of get
So
that
it has
exposure.
more of a global appeal. Because
That's
that's one thing, as I'm definitely not necessarily a rookie, but a rookie actually spending my money myself this time around. But what I personally just kind of have this hunch so far since I've been diving in is the limitations so far of the international market because of just
right.
we're all just kind of mentally conditioned into the time zone that we sleep and work under. But what I've
Hmm.
been very curious about and aware of is that aspect of other time zones and other stock exchanges that are out there, but there's such limited access to that information. So hopefully down the road we can touch into how maybe we can become more knowledgeable of those particular markets. But thank you for answering my question.
Yep, not a problem. And that's a great question. So hopefully, Bryce, as you go through this again, you can jot that down, and then we can go about tackling that and see what information we find for you. So that's no problem. Okay, and we'll go on to the ETF, and basically, the ETF it is sort of, let me see here. It is an exchange traded fund, and they more or less try to track an index. So it's not necessarily going to beat it nor lose to it. It wants to keep in line with how that certain index is going. And as mentioned prior with the ETF, it gives you that exposure, that international exposure to anyone who's looking for that. And also you do get dividends out of the ETF, but it depends on how much of that ETF you own. So if you own, let's say, of that entire ETF portfolio, you own 1% out of it, then you'll get that equivalent to 1% of the dividends which are paid out throughout that ETF. So the less you own in an ETF when it comes to dividends, then the less you will receive. You had a question, someone? Okay. So another advantage to the ETFs is that their fees are usually lower than mutual funds. Because since someone, or if it's passive, it could be like a robo investor, but someone or something is looking after those investments for you. So then you have to pay a fee for that. And so people tend to like the ETFs more because the fees are lower. And as mentioned prior, you can trade the ETFs throughout the day. So it gives you that much more flexibility in doing your trades or whatnot. So there's usually two types. There's passive management and there's managed funds. And so with the passive managed funds, they more or less try to track the index as mentioned prior. They track it and, try to match it. Whereas when the funds are managed, then they're going to try and beat it. So usually when you're engaged with a managed ETF or a managed mutual fund, the fees will be higher, but you're more likely to get better gains from that kind of management style. If you're looking for passive, then usually your strategy tends to be more long-term and you're not really in a rush to be switching money out in that case. So for newbies, when you're looking to maybe invest in a mutual fund or ETF, it's best to understand, what industry or index do you really want to get that additional exposure to, and have your strategy. Whereas if you want to really grow a portfolio and maybe, you want to hold it for at least a year, then for sure, if you find a good mutual fund, that's a good way to go. If you want to do a bit more shorter, then ETFs are better because you have that flexibility, and also their fees are usually cheaper than the mutual funds. So that's a key which you may want to remember and consider when looking into the mutual fund or the ETF. Okay.
Josh, yeah,
Yeah.
there is a question from Jackie. She's
Oh,
asking,
okay.
Thank you.
is the ETF also referred to as an index fund? Is it the same thing?
Yes. Yes, they're the same thing. As mentioned, they're both just tracking an index, and it really depends on the ETF which you tend to go for. I know there's the Vanguard. They have good ETFs for that. Oh, sorry. I'll get to that question afterwards. And so some of them are obviously more aggressive than others. And when you're looking at the ETF, it will tell you like what the portfolio consists of, and it will also tell you who's managing it, and it'll tell you the fees. So when you look into the ETFs, they're usually pretty well detailed, so you know exactly what this whole portfolio entitles, and then obviously they tell you the price, and then you choose to accept or decline. And let's see, Janelle wrote a question. So let's see. So ETFs aren't good for the long run. You're saying no, ETFs are great for the long run. Saying ETFs are good, mutual funds are good, but as referring to the investor style, whereas ETFs gives you that flexibility to, if you do need that money and you want to pull it out, you can, and you'll get a better market price. Whereas if it's a mutual fund, the price is locked. So if the fund manager say, for today, the price is $12, then you have to accept that. Whereas with the ETF, maybe the market's having a great day and it's up by $4, you can sell it. So that's the difference between the ETFs and mutual funds, but they're both great for long term, and definitely it offsets your risk management. A key example would be like Warren Buffett. He has ETFs in there, and it's good for risk management. Whereas you have your market, and then you have your ETFs or your funds, where it's basically growing your money at a more low risk rate. So when the time comes when you want to just take the money and buy, instead of leaving it in that bank account, this money grew by 4% or so, rather than a fraction of a penny. So it's always good to have mutual funds and ETFs in your investment portfolio. And I think what I'll do afterwards is there's a few which I know about, and I will put the information into the group so you guys can have a look. And definitely, if you want to get into the additional exposure, and like I said, it's great for risk management, then definitely go ahead and do that. Okay. So
Right, great.
I think, yeah, that's a good basic summary of that. And as mentioned, if I missed anything out, guys, just definitely leave the notes in the group. And we want to make sure that we're well educated here and gaining that financial literacy, so we're making a better choice.
All right. Thank you, Josh. Anyone has questions? Okay. So,
Would you
oh, yeah.
recommend a top? Can you hear me?
Pardon me?
I was gonna say, would you recommend a top three ETFs or mutual funds, or top five or top 10? Or do you think they're more of
Mutual
misfit
funds, I wouldn't
ranking?
know. Mutual funds, I wouldn't know too much, but for ETFs, the Vanguards are very good, and they have
Okay.
quite a few selections to choose from. But they're good. They're well managed, and the fees are at a good rate. So I would recommend the Vanguard uh, management ETF funds.
Okay, and then, as you said, it becomes more specific in regards to what industry you're personally interested in getting exposure in. Correct?
That's right. They have different ETFs, and they're each in looking at different indexes or industries or sectors. Mhm.
Fantastic. Now, would you have a top three industries that you would say are hot right now?
Um, Looking into the long term, uh, I would say,
Yeah, you can do like long
th-
term,
for,
intermediate, and short term if you don't mind. If you have
yeah,
that many suggestions, sorry.
no problem. For long term, I definitely would say looking to investment industries, whereas you have or Berkshire, like Warren Buffett, like those kind of styles where they're doing investing. I would say
Hmm,
those are good
hmm.
for long term because they're at a lower cost right now with everything going on. But as things pick up, their portfolios will grow very big because
And
they put the money in and now they're just letting it grow.
and they have usually a tip on what that next is going to be in regards to whatever that particular industry is that they've invested in. So I see your vision on kind of following those particular individuals like a Warren Buffett and so forth, because that's why they're kind of dumping their money into things that they think are going to be the next thing to ride. That's something I've been starting to understand.
Yes, that's right. I look at it in that same manner where understanding and looking at as to how this product or this service is going to grow, and also what things could hinder this service. And once you have that good understanding, then it's like, okay, with this COVID happening, like the market is really overvalued right now because a lot of people are not working, but the market is very hot right now, which shouldn't be making any sense. But since the government is putting a lot of stimulus throughout the world, then a lot of people are just they're at home and they're surfing the internet and they're seeing, make money and invest, and then they start doing lots of day trades and stuff. So a lot of companies that would be buying back their stocks, they're not doing that right now because they don't really have that financial power to do so. So then a lot of the day traders are buying those stocks. And so that's why you see a lot of companies going up and down like high volatile because of this reason. Because the day traders are picking up the stocks which the companies usually would buy back. So with that in mind, you look to say once the stimulus stops, how is this going to affect the industry that I'm thinking about? And then as you do the research and you start to gather the pieces, you can start understanding, okay, this company has a good, let me invest in them while they're at a good rate. And as they grow, you grow with them.
Hey, so Joshua, hi there. My name's Kevin. I came in the call a little bit late. Oh, sorry. Can you guys hear me?
Yep, go ahead.
Okay, I guess my question was, you were talking about you don't hold any RSPs earlier. Is that what I heard, or did I just hop in the conversation too late?
No, he doesn't hold any mutual
RSPs?
funds.
Yeah.
I don't have RSPs, but yes, we were talking about mutual funds though and ETFs.
Okay, gotcha. So I kind of equated the mutual funds as RSP,
Oh, okay.
more or less.
Well, yes, you can get
Go ahead.
RSPs with mutual funds inside them if you want to do that. But you can also get RSPs and buy investments inside of them if you want to go in that manner. But
All
I
right,
mean,
yeah.
I personally don't really
Yeah, so
recommend that
your
because
RSP
then you're
is much more than that vehicle.
right.
Now, I'm not a day trader at all. Obviously, I've dabbled with that stuff. For me, it's more about like what's my risk tolerance.
Right on.
I,
Hello?
I think he's cutting a little bit.
Yeah, I didn't hear anything what he was saying for the last few seconds. Or unless if you want to write it down, if you have a question, that might work better. And then for Jacqueline, I'll definitely write
The other
a
thing is,
few industries which I'm sort of looking at.
sorry to jump in, guys, but I think it's because everybody's got their mic on. So we can try to keep the moderator's mic on, and then whoever's speaking, that might be able to help out the communication.
Mm-hmm. Yeah.
All right, Josh.
Yep.
Okay, so
sorry about that.
yeah, I guess yeah, it looks like we lost Kevin, but yeah,
Yeah,
Kevin,
back now.
yeah, that's good now.
Okay, I'm actually going to switch to my. I'm going to switch to.
Okay, so I would say, yeah, Kevin, if you have a question, okay, he left the meeting. Probably he's going to join back. But yeah, we can keep on going. So, Josh, if you have anything you wanted to finish.
I think yeah, it was more or less sort of covered everything I wanted to cover for that. So nothing more from my part. But as I mentioned, if there is something which comes up and you have questions about the EFT or mutual funds, then by all means, please write them in the group and I'll get you as soon as possible. And yes, with regards to the industries for the ETFs, I'll also drop some of my recommendations in there. But as always, it's always good to do the research and get a good understanding. And I'll do my best to assist you in any way I possibly can.
All right, thank you. So, yeah, if you can share that with us, maybe tonight or tomorrow, that would be awesome.
No
So,
problem.
yeah, I think that as Janelle suggested, we're just gonna keep the questions in the chat, so it would be easier for that. Yeah, on the yeah, thank you very much, Josh.
No
So
problem, bros.
yeah, so now for the other part, actually, there is one thing that I wanted to introduce to the group because sometimes people are asking me about different strategies, how to trade on the stock market. And there is one strategy that I'm using that I find really interesting and that I wanted to share to the group. So if you want to start buying stocks according to looking at the charts only, that would be great. So I'm going to present my screen. Let's see this one. All right. Can you share? Can you see my screen? Oh.
Yeah.
Okay, that's good. So you see FinViz, right?
Yeah.
Josh. All right, great. So yeah, so basically what I'm gonna do is that there is something that I'm doing often when I'm trading stocks, and it's a strategy based on the what we call the moving average. So yeah, also guys, at any time if you have a question, please feel free to ask me just at any time in the chat. So yeah, basically the goal of the strategy is to invest into stocks that are trending and always yeah, buying stocks that are always going up. So first of all, we always have to find those stocks that I'm going to show you a bit later. And once we find those stocks, what we're looking for is entry points. So one that I wanted to show you actually was Zoom. So we all knew that during COVID, people started using Zoom a lot, right? And a lot of time we can identify trending stocks because they always have the same pattern. So they're gonna go up and down, and they're gonna go more up, and after that down, and then they're just gonna bounce back, right? So this is how we can identify trends every time on the stock market. So one thing I like to do usually is to always look at the lower points in the trend. So as I told you, it's going up, down, up, down. Always go and try to, you have to draw basically touching as many points as you can on the trend when it goes down. Then you're able to identify that, this market is trending. There is probably some good opportunities to buy. So on this chart, I'm going with a strategy that that involves two indicators that are called moving averages. So if you're familiar with TradingView, basically this is a TradingView, just to make sure that I really like to use this one. So I can put indicators like I'm going to do right now, and I'm always looking for the moving average. And the moving average, once I put it, it's basically the average of the last days. So every point that you see, for instance, this point on the blue line, is the average of the last 9 days in that case. So that's why it's showing here. And let me just try it a little bit different. Okay, I cannot. Anyways, that's okay. So yeah, always looking at this one. And then what I'm going to do is that I'm going to change the input of it. I want to have the 5 days moving average. So I'm always looking at what's going on in the last 5 days, see how the market is. And this is going to be what we call in that strategy, the fast moving average. And then I'm going to go to add another moving average that is going to be a bit slower. That is the 9 days moving average. So the red line is looking at the 9 last days, and the blue line is looking at the 5 last days. So usually what I'm doing is that I'm going to look at stocks. So now I'm on the daily chart. Now you can see I have a great trend going. And every time the fast line, which is the blue moving average, is going to go under the red line, I know that I'm coming close to an entry point. So for instance, you see every time it's going under, I know there is an entry point right here, right? So at this point, normally I can just invest. And as Monica was mentioning last time, she was talking about the stop loss. I can actually put the stop loss under the line. So if the price goes under, I just exit my transaction. So for instance, if I would have entered here, I would have all of that just as a profit, right? And then I'm going to wait and wait for the other time when it drops. I'm going to buy again and again do the same profit. And this is always what I would do, right? So you see how it's always the same pattern, right? Always the same thing. So I think it's a great way to find entry points on the market, on trendy markets. So for instance, this one was actually Zoom. There is Uber that I saw that is doing great now. So if I'm going with the same strategy, I just draw my trend line and try to touch as many points as I can. You can see that it's going to do the same thing. So it drops under, then you can buy, it goes up after, and you do always the same thing, right? So at this point, for instance, we see that we are under. So technically Uber would be a good time to buy, right? And making this stop loss right under. So anyone has any question about it, or if I'm going too fast or something? Let's see if I can see in the group. All right, more examples. Okay, good. That's great, Janelle, because I have some other examples. Yeah, same thing like this one. This one, you see the trend is a bit faster, but at the same time, same thing, just linking all of those points. Now I see where it's gonna bounce, right? And every time it bounces, if it goes under, time to buy. Can just buy, put my stop loss, it goes up. So same thing all the time. Usually when I'm doing those things, I like to also look at the stock in general. So I might like shrink it a little bit to see if it's performing well, right? And you see that this stock is actually a stock that you want to have. It just goes up. You can leave it for, I don't know how much time, right? So, yeah, always I prepared few of them here. Actually, this one, it's one that I bought this morning. So this morning, basically, I saw that it was the same thing, drawing the trend line. Oops. And yeah, following the same pattern, it went down at this point. I could have buy, then following, it hits the line again. I could have buy right there. So now I saw that the pattern was there, hits the line, then I just bought. And hopefully it's gonna go up. We'll see, but this is just an easy strategy to use. So one thing I would like to add. Oh yeah, sorry, just looking at the questions. Okay, that's good. I saw that. Yeah, so basically this is the strategy. Now, a lot of time, what is also interesting is to know how to find those stocks, right? Because we want to see where we can find all of those trendy stocks that we can apply the strategy to. So what I'm using, it's, I'm gonna go again, it's Finviz. And Monica talked to us about Finviz also last week. So I won't go too much into details, but I'm using the screener. And in the screener, at this point, I'm going into the technical part. And to identify those stocks, I'm looking at, first of all, the 200-day moving average. So I want to have something that is going up. So I'm going to go with the SMA means simple moving average. So what I want to have is simple moving average 50 is above simple moving average 200. which is 200 days and 50 days. So I'm going to put this one as a filter. And after, I'm going to do the same thing with the 20-day moving average. I'm going to go put the simple moving average 20 above the simple moving average 50. And at this point, I'm basically seeing some stocks that are trendy right now. So just to make sure, I'm always looking at the same industry. And I think I mentioned it today as well. When I'm buying stocks, I'm always looking at something that I can sell fast. So I'm going to go for a stock that has over 500,000 transaction a day. I'm going to apply that as a filter. And yeah, other than that, I'm always going into, it's me personally, because I'm doing that on my day to day. So I'm always looking at software and application. And at this point, once I have all of my filters put, I can see everything, right? So you see all of those stocks are trendy. If you see just the chart when I'm going over it. So at this point, I basically open all of them, right? So I have ADSK, that is Autodesk. Maybe you have heard of those. They do 3D things, I think, printing or something. And yeah, 3D modeling. I'm not sure exactly, but yeah. So yeah, you see like how the stock is just trending all the time, right? So now same thing. We're gonna look at it. We're gonna draw the trend, see how it goes. If we can touch as many points. If it goes over, sometimes we can force it a little bit. Like we know that it's a trendy one, right? So we want to have places to buy. So yeah, at this point, for instance, once you get the cross, good time to buy, you can just enter the trade. And usually once you enter, you might have to hold it for, I would say, 5-10 days. So which is 1-2 weeks, just to let it go a little bit. And then you can take the profit according to your strategy. Or also there was a question about the stop loss, the trailing stop loss. So something that we can also do. Okay, sorry. So yeah, Janelle was asking how many months behind do you track? I'm not sure that I understand the question, Janelle. So usually I would say, if I understand correctly the question, when I'm looking at the chart, I might actually show the monthly chart, right? So you see, now I was just looking at Autodesk. I'm just going to look at it in general, right? I actually don't want to buy if I see that it's going down on the monthly. It might be risky to enter at this point, right? But if it's going up on the monthly, then it's fine. Then I'm going to go into the weekly and look at the same thing, right? So is the weekly looking good? If it's going up like this, it's great. If it's going down, then it's a bit riskier. But if it's going up like it is right now, I would check into the daily. And even what I'm going to do after is that once it's time to enter the transaction, I'm going to go into the hourly. I want to see how it is every hours, right? And I want to find a turning point like this one, same strategy, looking at the simple moving average and see really this point that I want to buy, right? The lowest point. And if you want, sometimes I'm doing it, I'm going even more, going into the 15 minutes. See at this point, we're looking at this point, right? Is it a good time to buy? So trying to find an entry point, we want to find the lowest point, right? Just to make as much profit as we can. But most of the time, depending on how long we hold it, it's not a big deal even if we enter after, right? If we don't take the lowest point. Okay, so yeah, Monica wanted to see the filters. I'm gonna go back to the filters. Just want to make sure that yeah, it would be great so everyone can see the filters. Those are actually to find trend. It's a filter that I'm using to find trendy stocks. So I just want things that are trending right now for this strategy, right? So I have a filter on the volume, make sure that if I enter a transaction, I can exit the transaction fast. And I'm not stuck with a stock actually. And finally, I have the simple moving average 20 that is above the simple moving average 50 and the simple moving average 200 under the simple moving average 50. For the industry, I like to use software and application because this is what I do. But I would always suggest to go with things that you do, right? So if you're familiar with something, like if you're familiar with medical devices, I would suggest to go into, just put medical devices and look at this stock, which is A, B, and D. So same thing, look at it. All right, it's trendy. And then we can see same thing, all of the points where we can buy, right? So even without drawing the line, we can still like already see it. How do you draw this one? This one is a bit turning. But at the same time, yeah, you see there is entry point right here, went down under the red line. Same thing here, right? So actually, even now, if you're in that industry, that would be a great time to still buy, right? There is still a good way up that you can invest in. So let me see if there is other questions. Yeah, so I think that's mostly it. All of that is recorded. So I think that it's a great strategy. So I encourage you to, if you have never tried or something, maybe just to like try those strategies, see with paper trading, or just like, even if it's just looking at it, see how it's gonna go. Let's say you pick this stock that I just showed you, see in the next days, in the next 2 weeks, how it's gonna perform, right? So after we can see that, all right, maybe this strategy is interesting, we can try it. And also one thing is to play with the input of the moving average. I like to go with 5 and 9, but you can move it, right? If you like to go with 14, you can go with 14, right? So you have less entry point, but at the same time, sometimes it's great according to your strategy, right? You can keep all the longer and keep your stocks longer and all. So yeah, that's mostly it for that. So
Right, perfect. Thank you.
yeah, I think that Janelle was asking about the trailing stop loss. I don't know if Monica is able to talk right now. Let's see. No, I think she's not there. But the trailing stop loss, I'm not sure exactly how to set it up. But one thing that we like to do often with trailing stop loss is exactly, for instance, if I have to trade this one, I'm going to remove this. So you see where the blue line is touching. I'm going to enter at that point. Let me just actually go back to 9. All right. So now the blue line is going under. So at this point, normally I would buy, right? Around this point, I would buy. And what I would do is that I'll let it go. And if you put a trailing stop loss, it's gonna go up with me, right? So basically, I'm gonna reach the top of the trend, and before it goes down, I'm gonna exit the transaction. This is the trailing stop loss. How to set it up? It always changes according to the broker you're using. So I cannot really say much about it. I'm using Questrade, but I'm not using a trailing stop loss. So yeah, I don't know if anyone else knows. Josh, if you have an idea.
I don't really use stop losses per se. So I wouldn't really know really to how to answer that right now. I look into it, but I won't be able to answer it just right now though.
So the best thing I would suggest is just to go Google it. So name of your broker, if it's Questrade, trailing stop loss. A lot of time they might have some ways to set it up. I'm not sure exactly. The thing that I don't like sometimes with stop loss is the fact that it's just harder to leave the market breathe in a sense, because sometimes things are going not as expected, so you don't necessarily want to exit the transaction, and the stop loss is going to do it for you. So sometimes it's better to actually just have a stop loss by looking at the chart, right? Just at least if you feel that it's still going up, you can let it go instead of cutting it short sometimes. So that's the reason why I'm not using stop loss, but I used to use stop loss before, and it's a great thing depending on your strategy.
Mm-hmm.
Yeah. Yeah. Anyone else has questions?
No.
No. I think that's good. So yeah, basically, maybe I'm gonna share a screenshot of the FinViz that I have of the screen. So if you want to try to use those filters and get the stocks, maybe I'm doing it weekly or something. You can actually just go try. I would encourage you to try it, just see how it goes. And if there is some interesting things, also if you find some interesting stocks, please share it to the group as well, so we're all aware of it and we can all follow. So yeah, would be it. All
Okay,
right.
that's good. Thank you.
Yeah. All right. Thank you, guys. I'm gonna put everything on online. So if you want to see the conversation again, and I'm gonna share it in the group tomorrow. All right. Great.
All right, thanks a
Cool.
lot, guys. Have yourselves a great night.
Yeah.